If you are early on in your investment journey, then I think this video will save you a lot of time, money, and stress in the future. To be completely honest, I have made lots of mistakes when it comes to investing in the stock market. I have blindly bought into some stocks without doing the right amount of research simply because other people were buying them. I've been under-diversified, and I've gone over a full year with a completely negative total rate of return. Fortunately, I have stuck with investing long enough now to build my portfolio back up, and now I see some gains in the account again. Trust me, I'm not perfect, but I've been educating myself on the stock market for over 10 years now, and I'm literally just learning as I go, and I make videos sharing my experience. And today I want to talk about 3 key things that I've learned that I think are essential to know if you're early on in your investment journey. Let's get right into it, and the first one is you are not going to get rich quick. I know you want that financial freedom, so do I. Everybody wants that $3 million stock portfolio and they want it yesterday, but let me be very clear, it is going to take you years, if not decades, and you have to think with a long-term mindset. But I'm only 4.5 years into building and managing my own portfolio, and I think I'm sitting on a little under $10,000 of unrealized gains. But I can tell you that today I'm happy that I had a long-term mindset 4.5 years ago. And 5 years from now, I'm willing to bet that I'll be happy that I had the same mindset today. I can't tell you how to build $1 million stock portfolio. I wish I could, but I haven't done that yet. But I'm confident that the mindset that got me to a little over $50,000 is going to get me to over $100,000 and up from there. If we take a look at Warren Buffett's net worth over time, starting at 15, we can pretty clearly see that the majority of his wealth was built in the second half of his life. And if we look at his net worth from ages 19 to 26, it only went up around $16,000. And if we look at from ages 66 to 72, which is only 6 years, his net worth increased by more than 15 billion. And obviously these are some pretty crazy numbers, but if he would have never had a long-term mindset when he started investing at a young age, all of these exponential gains later in life would have never happened. If you're thinking short term and you're just looking to get rich quick, there's actually a good chance you're going to lose a lot of money and get discouraged from investing. And that's going to kill any chance that you have of seeing exponential growth in your portfolio long term. Even I started with a short term trading type mindset, and surprise, surprise, at one point I ended up losing half my portfolio. But start as early as you can and give yourself the most amount of time to have your investments compound. The second essential thing that you need to know if you're early on in your investment journey is income matters. Bottom line, if you want to invest, you need money. You need monthly income, and you need to be spending less than you're making so that you can actually put money away at the end of each month. But I believe that this is really a foundation for building wealth, and it's something that also kills a lot of people because they have completely uncontrolled spending and have nothing left at the end of the month. And I get it, saving money sucks. I would also rather be out there spending all my money because it is fun, and I do think it's okay to spend a little bit and enjoy life along the way. But the more you put away at the end of each month, the faster you're going to see your account grow. And depending on your life situation, this might sound like a high number or a low number, but you should really aim to put at least $1,000 away a month and contribute that into your investment accounts. So if we take a look at this investment calculator, if you're able to put away $1,000 at the end of each month for 30 years with a somewhat conservative estimate of 9% rate of return a year, you're going to have $1.7 million. And if we look at this graph down here, we can really see why I think the contributions is so fundamental to building your investment account. Even if you keep your contributions the same over time, the amount that's in the account is going to exponentially grow. So figure out how to save more money each month, maybe cut back on spending. I'll leave a link to that calculator in the description below, which I have no affiliation with, but I'd recommend that you go and plug in some numbers that are realistic for your situation, so you can see what's possible. And this last thing that I'm going to touch on will allow you to make smarter investments and hopefully get higher rates of return in the future. As a new investor, you absolutely need to have some level of understanding of analysis fundamentals. Learn how to research a company and make educated bets. The more business sense that you have, the easier all of this is going to be. And the more that you understand about the economy, it's going to make it easier to understand specific industries and businesses in those industries and stocks of those businesses. If you're new to business completely, I would recommend buying some books or buying a course and just investing in yourself before you actually start investing money. You could read The Intelligent Investor, Rich Dad Poor Dad, Cash Flow Quadrants, The Psychology of Money. Any of those work, but just please read at least one of them. And everybody has their own method of research, and everybody does a different amount of it before they feel comfortable buying a stock. As a general rule of thumb, I would start as broad as possible and narrow into that specific investment you're researching. And here's a quick example of things that I might look at if I was to, say, research Tesla stock. First, I would definitely just make sure I know what the general state of the economy is in. Are we trading at all-time highs? Are we in a bear market, a bull market, a full-blown recession? You can look at the Fear and Greed Index. Then I would look at what is the specific industry that Tesla operates in. So what is the state of the electric car market? You know, they also have some solar stuff, and it's also a bit of an AI and robotics company. You know, how expensive is Tesla trading compared to its competitors in the industry? Then once you have a broad understanding, really try and understand Tesla as a company. You know, what problems did they solve? Who do they solve those problems for? What is the vision for the future? Who is the CEO? Then you can get into some statistics and data, like are they growing revenues? What percentage are they growing revenues by? Are they profitable? What's their market share? What's their valuation? Does the stock make sense for my specific portfolio? You know, you don't want to be too under-diversified. And the great thing about this day and age is that you can essentially learn all of this online for free. It's going to take some discipline, but if you continue to work at it and continue to learn about the market, you can definitely make it to a place where you're comfortable and confident buying stocks. So to give a quick summary, you now know that you need to have a long-term mindset, and the sooner you start, the sooner you're actually going to see the benefits of having a long-term mindset. Income and the amount of money that you save at the end of each month is the absolute foundation to investing, and the more disciplined you are with your spending, the easier it's going to be and the quicker you're going to grow your portfolio. And hopefully you have some idea about how to research so you can feel confident when you buy stocks. I also make videos on all these topics, so if you're interested in learning more and want to stay updated with the stock market, subscribe to my channel for more finance-related content. Thank you so much for watching, and if you got any value out of the video, consider dropping a like. Let me know if you have any feedback or any ideas for content that you want to see in the future. Just drop a comment below. I wish everybody the best of luck on your investment journey. Peace.